This video was created to demonstrate how to calculate the cost of goods manufactured. Please refer to the sidebar under References to obtain a copy of the question used in this demonstration. Let's start by reviewing how to calculate cost of goods sold for a merchandising company. We would take the beginning inventory and we would add the purchases that the company made throughout the year. That would give us the goods available for sale. So these would be all the goods that the company has available to sell to the customers during the year. From that, we would subtract off the ending inventory. So a company would do an inventory count at the end of the year, count up what they had left over, and the result is cost of goods sold. Well, the way I like to remember this formula is turn it into a bit of a visual, and what I do is rearrange this a little bit so that I can remember it a little bit easier. So the way this visual works is that I take my beginning inventory and I add my purchases to it, and both of those things added together equals goods available for sale to our customers. From the goods available for sale to our customers, if we subtract our ending inventory from that number, we're going to end up with our cost of goods sold. So basically what we end up with is two sides to this equation that have to be equal. If we take our beginning inventory and add our purchases to it, it always equals goods available for sale. If we take our ending inventory and add our cost of goods sold to it, it's also going to equal our goods available for sale. So if we put a couple of numbers in this chart allows us to calculate very easily what our cost of goods sold might be. So if I say that in our beginning inventory we have $1,000 worth of inventory, during the year we purchased $30,000 worth of inventory. Those two things added together would be the cost of our inventory that we have available for sale to our customers. We do a physical inventory count at the end of the year, and we determine that we have $5,000 left at the end of the year. If we take the 31 and subtract off the 5, you get $26,000. So we would have sold $26,000 worth of goods to our customers. So that's our cost of goods sold. Now, we can apply the same concept to a manufacturing environment if you change the terms a little bit. So in a manufacturing environment, this is kind of the way it works. You start with your raw materials, and you take those raw materials and add some labor and overhead to it, and then you get your work in progress. And once you do all the work to get these goods changed over to the product that you want, you end up with finished goods. That's the process that we follow in a manufacturing environment. So let's create a visual that we did with a merchandising company, and create a visual so that you can remember how to calculate the cost of goods manufactured a little bit better. When we look at cost of goods manufactured, we're only looking really at the raw materials and the work in process. This last finished goods calculation would be used when we're trying to figure out the cost of goods sold. So let's start with a clean slate here. Erase this stuff off. Just going to move these terms out of the way. All right, so where we start with the calculation for cost of goods manufactured is always with the raw materials. So we're going to take the raw materials that a company starts with at the beginning of the year, and we're going to add to that all of the raw materials that get purchased during the year. Now, if you add those two things together, they're going to equal the raw materials that are available for use in production. So just like the last example, if you add these two things together, they're going to equal the raw materials available for use. Now, out of the raw materials that we have available for use, we're either going to have some left at the end of the year, or we would have used those materials in production. And the same rule applies, that the raw materials left over at the end and the raw materials used in production also have to equal the raw materials available for use. Now, in order to calculate the cost of goods manufactured, there's a couple more steps we have to add. What we do is we take the raw materials used in production when we add two things to it. We add direct labor and we add manufacturing overhead. So once we add manufacturing overhead and direct labor to the raw materials used in production, this gives us our total manufacturing cost. Once we have our total manufacturing costs, we can use this information to be able to calculate cost of goods manufactured. When you're calculating cost of goods manufactured, you have to start with the work in progress, the work you had started at the beginning of the year, but you hadn't finished. And then we're going to take the total manufacturing costs that we used or created in the last calculation. When we add those two things together, we're going to end up with our work in process. So work in process, our beginning inventory for work in process, and manufacturing costs, so total manufacturing costs for the period, are added together to get our work in process. Then we know that if we calculate our work in process at the end of the year, we either have it unfinished, sitting in our warehouse, or it's been finished, and that becomes the cost of goods manufactured. These two things added together also have to equal work in process. So what I'd like to do now is give you an example with some numbers. So the hard copy, again, is located under references on the sidebar of the TLM. And Bear & Company had the following balances in their accounts as of December 31st, 2012, and it lists a whole bunch of accounts. It says, use the information to calculate the cost of goods manufactured. Now, what I'm going to do is go down the list, and as we go down the list, I'm going to put the number on this visual that we created. And what we're going to end up with is a number for the cost of goods manufactured during the year. I'm going to change the color pen. I'm just going to turn to black so we can see the numbers. The first number listed is direct labor. Now, direct labor is part of the total manufacturing cost, and that's $70,000. Then we have purchases of raw materials. So the company purchased $120,000 during the year. Indirect labor is part of the manufacturing overhead, so we're going to add $30,000 to the manufacturing overhead. Maintenance of the factory equipment, again, is manufacturing overhead. I'm going to include it down here. We've got advertising expense. Advertising expense is not a cost of manufacturing a product, that's a selling expense. We don't include that one at all in the calculation for cost of goods manufactured. We have rent for the factory facilities. That's part of the overhead for the company. So we're going to include the $24,000 with the total manufacturing overhead. Then we have office supplies. And office supplies, again, would be a cost of running the office, not of manufacturing. So we're not going to include the office supplies in the calculation for cost of goods manufactured. We've got amortization for the office equipment. Again, that's office related, so we're not going to include it. And then we have amortization of the factory equipment, $21,000. Again, that's part of the manufacturing overhead, and we're going to include that in our calculation. Then we have raw materials at January 1st, 2012, so that's at the beginning of the year. So I'm going to put that $8,000 up here. Raw materials inventory at the end of the year, this company ended up with $16,500 left over at the end. Work in process at the beginning of the year was $10,300. And work in process at the end of the year, December 31st, is $5,150. Okay, now when you look at this information, you have to start at the beginning and calculate raw materials used in production. In order to calculate raw materials used in production, you have to have these three other costs, or you won't be able to calculate the number. So this is the way I'd approach it. What I would do is to add together the raw materials beginning inventory and the raw materials purchased to get $128,000. Then I know that raw materials ending and raw materials used in production have to equal the 128. So I'm going to take the 128 and subtract off the 16,500, and I would end up with $111,500. Now we know what direct labor is. Manufacturing costs, there's 4 of them, or manufacturing overhead, there's 4 of them, and they total $81,900. We're going to add the raw materials used in production, the direct labor, and the manufacturing overhead, and that's going to give us our number for total manufacturing costs. That number is $263,400. Now we're going to take that information and plug it down here in our visual for the calculation of cost of goods manufactured. And again, with this visual, you have to have the 3 pieces of information in order to calculate cost of goods manufactured. So we do need the $263,400 in our visual. So we're going to add that to our beginning inventory of work in process to get our work in process for the year. And then we're going to subtract off our work in process for our ending inventory from our work in process to get cost of goods manufactured. So that's the calculation for cost of goods manufactured. Now, this isn't a statement of cost of goods manufactured prepared in good form. So this isn't prepared in good form. It's just a visual that I use to help me remember the calculation because there's so many numbers that get used, it's difficult to remember. Once I had completed this visual, then I would take the information from it and prepare cost of goods manufactured in good form using an example that you would see in